What's up, party people? It's May 7th, 2025. I had an expanding triangle. Expanding triangles are hard to trade for breakout traders. They messed me up for a good year or two. I could not figure out what an expanding triangle was. And every new high gets reversed, every new low gets reversed, every new high gets reversed, reversal, new high, reversal. So that's hard if you're a breakout trader because you want to buy the breakout and it reverses, then you want to short here and it reverses. I want to give a quick shout out to the members and the subscribers. I appreciate you guys. Thank you for always tuning in. I really like the conversations we're having in Discord. They're getting good. People are sharing their views, and I hope you guys are learning. So yeah, let's do this. I do have a trade sitting to the right of me. If it goes live again like the previous video, I'm going to throw it here and just do a quick breakdown. It's the same thing over and over again. Bar 20, what is that? Bar 209 made 1R with 210. So I set my order there. I'm looking for a tag. So it tags me and then it goes back up. The problem with this trade is it's in its third leg. Leg 1, pull back leg 2, pull back leg 3. So I'm not risking as much as I usually do because chances for a reversal are higher. But bulls, we are above the EMA and bulls are trending. So I am betting on a small pullback trend right now, which is a rare occasion, but we'll see. It looks like I am about to get filled. I'll put it back on the screen if I do. For now, let's just keep going over the breakdown because sometimes this happens and then it reverses and never fills me. We'll be here for 7 hours. Oh, so bar 209 had enough momentum with 210 and the tail on 211 rallied. It was a breakout, weak breakout. 211's a bad close, but it could be a pullback. So what I'm looking for is a leg 1 pullback, leg 2. And the minimum objective for leg 2 is 1 tick above 210. Well, that's subjective too, because you could argue that this is the leg 2 and then it reverses. It's just a weak leg 2. You have to decide what you think a leg 2 is. See what I said? The chances for a reversal go up in a leg 3. So leg 1. Sorry, my dog's barking. I'm going to mute the mic for 2 seconds. All right, I think he stopped. So I just drew out 3 legs. But like I said, I am betting that we go up a little bit more, maybe to around the swing here. It's just going back and forth. This is a live trade. Again, I'm still going to do the breakdown after this, but I think it's beneficial for you guys to see this. Just so you guys can see what I'm trading and how I'm starting to find consistency. I got a couple payouts in the early in January. Then I used some options in January, February. And then since then, I haven't been able to get a payout. So I'm definitely hoping to get that payout within this month. And that first payout I got was with My Funded Futures. And now I'm trading with Apex because Apex was going through some funny business and I just wanted to stay away from them. I think the storm is calming with Apex, so I'm back with Apex. And I am trying out another prop firm, but I'm gonna wait to just. I have a live account with them, and I have a what is it, like an eval account with them too. But I just want to see. They're a little bit more newer, so I'm just waiting for some confirmation of getting an actual payout. I do want to start the breakdown, but I want to have this on its side somewhere. I'm trying to think what the best way to do this is. I wish there was a way for me to minimize the screen here so you guys could see. So on a smaller time frame, there's a pullback, and now the bulls are trying to rally, but there could be more sellers on the tail of 210. Excuse me, on the tail of 211. Pretty close to target, 4 points away. I don't do this often, but if I get filled during the breakdown, I'm going to start doing them. And if you guys want to learn more about this, I talk about it in Discord. I'll have the Discord invite in the comments below. I used to be a swing trader, but scalping is better from a systematic perspective because I can miss trades. If you're a swing trader, you're going to lose more, you're going to lose less, and you're going to win bigger. But the problem with that is if you miss the swing, it messes up the system expectancy. Okay, I'm gonna put this to the side, and before the TP gets hit, I'll put it back because we're already 5 minutes in and we haven't started the breakdown. So, but you guys get the idea of the leg one pullback, leg two. Again, leg twos are the highest probable trade because there's 3 types of traders. The first trader is the bulls who bought this bar and made their money. They want to press their position now that they've seen it go a direction. The second type of traders are bears who bet 211 or 210 is going to fail, so they get short here. The problem is they could be in a winning position. We don't know where they sold. What we're betting on is those bears are in a losing position. They buy back shorts, the same area where bulls are buying, they're pressing the position. And then the third trader is us, the people who are looking for leg two. So that's 3 types of traders looking at one chart. Their perspectives are all different, but the function is buying the market. I don't really like that tail, but we'll see what happens. Okay, so to the daily breakdown. Market's trading higher. We're trending above the EMA, which hasn't happened in a long time. Leg one, pullback. Leg two, sideways price action. Again, we're in that swing. Here we have a channel and a trend line break. So this is the start of the leg two, and then we have opposite bars. So that's the start of the leg three. Or you could argue that this is one big channel right here. Different ways to see it, but what you have to know is we are in a later leg. We're in a leg past leg two. So a leg past leg two, then that dynamic I just mentioned doesn't really exist anymore. 15-minute chart. We're going sideways. Tough day for a breakout trader, right? This is trading range price action. Bulls rally for 3 legs, leg one, pull back leg two, pull back leg three. Bears vacuum down, creating a double bottom. Bears that trapped here, buy back shorts. Bulls buy the range lows. Rallies, makes a new high. Bang, makes a new low. Bulls try to make a new high, and then it sells off down here. 4 bear bars in a row, strong to get a second leg down, but that fails. This ends up being a reversal, leg one, pull back leg two, trapping bears right around, trapping these bears, creating a second leg, expanding triangle. Look what's going on. Remember I said how this dynamic doesn't really exist and the trend favors a reversal because we're in the third leg. And look what's happening, a deep pullback. My stop's right above the EMA, so there's a good chance I get tagged out in it. And then it rallies. But I'm not going to change my stop because that's where the system says to trade. Put it. Gap up, bad follow through, bear bar, training range bar has more tail than body. Bar 2 sells off and rallies. So now we have a double bottom, and then bulls buy the high of bar 2. Stop where bulls get filled, and they make 1R. They don't make 1R. They're in profits quickly, and they take profits because there's a scalp. And then look at bar 4, closing on its low. Again, here's the training range lows. Here's the training range highs. Bar 5, bull bar closing on its high, but it has a tail, and it's not closing past bar 4, so that's bad. Bar 6, good bull bar closing on its high, but now we could be in the third leg. Leg 1, pull back, leg 2, pull back, leg 3. There's enough momentum with bar 5 and 6 for the market to gradually grind higher. So if this is enough momentum, leg 1, pull back, leg 2, pull back, leg 3, and then there's a higher low that sells off. Right above we're right under the higher time frame EMA, so that favors a bear setup. When the EMAs go parallel, that's more trading range price action. Bar 16, bear bar closing on its low with really good follow through. 17, right? Yeah. 17 becomes climactic. It's the biggest bar. And there's a gap right here. First gap of the day. But trading range price action means gaps get closed. Then we go sideways for 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. Expanding triangle, you're going to make money being able to fade high ones and low ones in third leg. So here's this is a high one, or excuse me, this is a high one, this is a high one. That's in the later leg. Leg 1, pull back, leg 2, pull back, leg 3. You fade the high one and cash the next breakout. Leg 1, pull back, leg 2, pull back, leg 3. Here's the low one for the bar 20, bar 21. The low one's right around here. You fade that, and I just got stopped out. Did you guys hear that? You see what I mean? How the probabilities change? So for the third leg, I also bought this bar. I got filled on 208 and out on 207. But then that dynamic didn't exist for this bar right here. So I got stopped out. It is what it is. But now look at this. Third leg fade. Let's see if the bears that short 211 make 1R 213. I might take that depending where we are. So you want to be able to fade high ones and high twos, and that's not really the most easiest thing to do. I know I'm jumping around here, but I want you guys to see this trade while I'm taking it. So we're gonna sell, take profit, put at the limit. Cause see how this is a reversal bar that got 1R. Put my stop up there. Put this down here. Put that up here. Make that 120. I like to go around like 150 risk 1 to 200, so I'll raise it up 180. Risk about 180. Sell it. And there's the setup. I want to move that a little bit like that. 177, 177.0. And that's exactly how I trade, guys. You guys seen it live. Right there. There's the setup. Now hopefully we get filled. Maybe we do, maybe we don't. So fading high ones and low ones. Here's a low one and a fade work to the new high. Bulls have two legs up, leg one, pull back, leg two, and then slams 28. In trading ranges, we can see a lot of vacuums, and that's what we're seeing. Big bars vacuuming into new exchange. This is just a vacuum on a higher time frame. That's why there's many bars. Bulls bought 28, so that tells you that the bears are not strong because the bears that sold it got trapped on 29. Right, 28, 29. And it rallied for two legs, leg one, pull back, leg two. Deep pullback 35, 36. Trading ranges could have deep pullbacks, and then the market rallies. Bull vacuum all the way to a new high, or equal high. I guess that's not a new high. Yeah, so they didn't actually make a new high. But what's important is that the market did three legs. Look, let's say this is the trading range. Leg one, pull back, leg two, pull back, leg three. 46 is a bear bar closing out slow. That makes 47 a high one and a leg three. This is a leg three. 47 is a high one. You fade that and then bang. The good thing about expanding triangles is they don't come around often. So if you got beat up today, hopefully tomorrow we'll have a little bit better day. Because expanding triangles are hard. There's no doubt about it. And then this starts the next leg. Leg one, pull back, leg two, deep pull back, leg three, climactic price action, new low. Here's your low one in an expanding triangle, bar 57. That starts a three-legged rally. Leg one, pull back, leg two, pull back, leg three. The bars are climactic, so just know that's a trading range behavior, and gaps are closing, so that's trading range behavior. Remember, in trends, gaps stay open, in trading ranges, gaps get closed. So keep that in mind. Second, yeah, okay. So where are we? So second leg down, 48, 49, 50, 51. Breaking out below the EMA. Showing to get second leg down. Second legs don't have to be equal to the same size as the first leg. Bar 52, bull bar closing out high. It looks like these bulls are gonna get second leg. But this is overall third leg. Leg one, pull back, leg two, pull back, leg three, climactic third leg. And then it sells off, leg one, pull back, leg two, Sean to get second leg down. Very deep pullback, 55. 55 rallied all the way to almost the breakout point. But then it sells off, boom. This spike starts here, ends here, and we have an inside bar, 57. If you're short and you see 57, I think it's safe to get out because it's an inside bar after three legs and they can reverse. Then we have a rally, sells off right here, 58, trapping bears, rallies. Good reversal bar on the third leg. I don't really trade reversals from this perspective, but I could see why bulls would be excited to buy this. Far away from the EMA, and there was a rally here. There was a rally here. So that lets you know, look, new low, bulls bought it. New low, bulls bought it. New low, bulls bought it. New low, maybe they buy it. And they did. Bulls bought the low, bar 60. Bad close, but it is a bull bar closing just above the midpoint. And then we see a big bull bar, bar 61. That creates a gap. Again, gaps get closed in trading ranges. 62 has a tail, so it pulled back and then bulls bought back. So that already tells you that something's up because they went from buying all the way up to 61 to now they're buying pullbacks. And then 63, bad fall through above the EMA. We're in a bear regime. Boom, we see 64 closes the gap. And then 65 sells off and rallies. This leg strong to get its own second leg, and it does 66. But again, 66 is climactic. A lot of sideways price action. Bad fall through 67. Sells off rallies. Sells off rallies. Sells off rallies. These are all. This is bear, bull, bear, bull. But there's tails right here. So bulls are trying 1, 2, 3, 4, 5 times, and then finally we get bar 70, bear bar closing on its low, and that makes a gap with 70. Is that bar 70? No, excuse me, that's bar 71. We get bar 71, bear bar closing on slow, fall through 72, another fall through 73. On a smaller time frame, that's 3 legs down. Leg 1, pull back leg 2, pull back leg 3, climactic price action. You could argue that 73 is its own, is like 4. And then gaps get closed again, 75 or 74 closes the gap, or it starts to close the gap. Gap gets closed with 75. But 75 is now climactic and makes its own gap, which gets tested this time. The gap gets tested with bar 77, and then we rally for two legs. I actually didn't place any trades today because it was FOMC. I don't really trade FOMC because of this type of reason. It's just bang, 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 you know. One trade I probably would have taken was here, and then I get stopped out. Another trade I would have taken is here, and then I get stopped out. This bar, so you guys see it's a little bit difficult to trade FOMC. Here's a 1R. No, I wouldn't. And bar 29 made 1R, but it took a very long time, and then by the time the market got back to it, the bulls weren't excited anymore. And my dog is barking again. So give me 2 seconds. My guy's probably just gonna call it right there because he's just barking. My neighbors are doing construction again, so that's why these videos are a little bit late. I'm waiting for them to stop, and then there's construction workers outside the house, so that's what he's getting at. I hope you guys learned something with this live trade. You know, losses happen. I got stopped out. I got this now sitting here looking to get filled and reversed because I think the same dynamic. The bears that shorted here made 1R quickly. They're gonna press the position when it pulls back. The bulls, I had to sell out of. That's a great example. So you saw 2 times. So I was a losing bull that had to sell out of a short, adding to the selling pressure. Now I'm a bear looking to catch a second leg. So that's how I trade. That's the dynamic. It's simple. It's repeatable. If you guys want to learn more, hit me up in the Discord. Join the membership if you want more in-depth videos. I will talk to you guys later. Thank you for your time. If you learned something, share the show. Don't be a hoe. Have a good one, everyone. Bye.